be able to continue to make the payments on the house, or they're coming to the realization that they have a $300,000 mortgage on a house that's only worth $150,000. It's just doesn't make good financial sense to continue on that path. They want to bring a lender in to do, again, modification, principal reduction, just a recasting of the loan to make it so that it's affordable and they can stay in their home. They can't do that with the pretender lender. So by filing the quiet title action, it's going to force the lender or the trustee of the trust who owns that note to come into court. And when they do that, that's when you don't have to litigate it. Sorry, you don't have to litigate it, but you can simply walk in the next room and negotiate it.
And so that same bank would give you a new loan if you worked it out.
Exactly. And again, a modification is a bad thing. A recasting of the note is a good thing. The only ones that can recast the note is the holder in due course.
And so then it would be at today's market value?
It would be at today's, they would actually, a couple different things. You can negotiate yourself and try to get it down to a fair market, today's fair market value. In some cases, we have investors that will come in and negotiate with that lender to purchase the note at a deep discount to the investor and then give it back to the homeowner at 80% of today's market value. So even in that scenario, if you do a short sale, you walk away with no money. A lot of the banks now, especially in California, a lot of the banks are saying that you cannot put a deficiency judgment on against the homeowner that forecloses. So now the banks are saying, because we can't do that deficiency judgment, we're not going to accept a 10% payoff. We're not going to accept. So we want 60% of that value of that property. Well, if we have an investor that can come in and buy that note, give it back to the homeowner, even if they want to sell the property, they're going to be able to walk away with some cash.
Now, would this be a typical real estate investor or some kind of a group investor?
We have hedge funds and we do have private investors that have a lot of money that can come in and purchase the notes from the lenders.
Can you tell me a little more about the hedge funds?
The hedge fund, the one that we have that we're working with immediately is Boston Capital. You can Google Boston Capital and it will tell you all about their mission to help save homeowners, where they're making them qualify. You can't just take a person that has no income, no assets, no liabilities, and put them into a new loan. That's a short sale. But if you have someone that has the ability to make a house payment, what they do is they get them into qualifying mode. They make them save money for 6 months. They buy the note from the investor. They recast the note to the homeowner. And then that homeowner is paying their payments now to Boston Capital.
So the homeowner wins?
The homeowner wins.
The investor wins?
The investor, the actual lender in due course wins because he has so much fraud that was committed and wrongdoings with that loan. This is just a way for them to clean up their dirty diapers.
So the bank wins and saves face?
They save face, they don't set precedents in court, and the hedge fund actually, it's a win-win for them because number one, they're being good by doing good, and they're also making the spread on the property from what they bought it for to what they give it back to the homeowner at.
So does any party lose in this scenario?
No, they do not. No, they do not.
And are people very familiar with this scenario?
Nobody knows about it at all. Matter of fact, you know, they're just starting to get starting to shine a little bit of light on what the banks have been doing over the past 10 years. And to be honest with you, the general public, they don't care. They get up, the sun's shining, they're alive, they just go on with their lives. But they're not really looking at the effects of our financial market these days. And that's a shame. They need to really educate themselves.
So tell me how an investor can walk into a person that's upside down and make some good money on their deal.
Well, there's a couple different ways. Again, if a borrower is going to walk away from their property and you have the means to come in and take over that property, you could work out a deal with that homeowner to sell you the property subject to. And then if you're entitled on that property, anyone that's entitled can file a quiet title action. So that investor buys the property from the homeowner, turns around, brings the bank into court. And really the most important thing we have to talk to on this quiet title action is, on a foreclosure defense, you start on the 2-yard line of the opponent, which is the bank. And you have to march that 98 yards to get a touchdown. With quiet title, you're starting on your own 2-yard line. Because the difference is, you want to defend, or do you want to be on the defense or on the offense? When you're on the offense, you know what the next play is going to be. On the defense, you're guessing. So by doing the quiet title, it puts you on the offense. The bank has to prove any validity to your debt, and without that, you win.
It sounds like you're virtually eliminating the litigation.
98% of the litigation.
So again, how would the investors make good money in a deal? I mean, you told me how they can maybe get a house subject to. How do they end up with profit in their pocket?
Well, because when they buy that property from the homeowner, it's going to be, there's no equity in the property. Most properties are upside down. You work out a deal with the homeowner to take over the title of the property. Again, you give them whatever moving expenses if they want to leave. Whatever difference you negotiate with the bank from what you purchased that property at, or what the market value of that property is, you're going to get that spread. In some cases, that spread could be 60%, 70% profit. That's not a bad...
And would that be legal?
Absolutely, why not? I could buy a property from you, you could sell me your property, whether it's upside down or not. And then it's up to me to try to negotiate the debt down to the fair market value or a perceived value.
So you're saying that because the market dropped a lot, there is a large, and because of a bank fraudulent move, and because you've put quiet title action on the bank to come to court, you've just created a huge spread on each and every deal.
Absolutely. Some spreads are going to be larger than others, but if I can do 10 homes at $5,000 each a month, I'm still doing okay. Yes?
Yes, yes, that would be great money.
If I do one house at $50,000, it's still a very good month.
Okay, how easy is it for attorneys to take on one of these cases?
Well, again, attorneys know, they know law. They can do a lot of research. They can do a lot of homework. They can have their paralegals staying up till 3 in the morning gathering all the information, or they can simply submit their files to the U.S. Property Shop. We'll do all the analytical for them. We'll pull the reports that they need, and we'll even provide them with we have attorneys that will prepare their motions for them to take into court. So essentially, they can take their hours and cut it into a third, actually. So they would only have to do is take the documents, walk into court, file their motion, come back to court to see if the banks have shown up or not.
Will they also provide the affidavit?
Well, on the financial report, we get an affidavit from the attorney and a financial analyst that shows the reports are paid off, or the tranches are paid off, what part of it's paid off, how much of it's done. So yes, the affidavit from the attorney gives them all the information they need, and that attorney will show up in the court if it's necessary for testimonial.
So you do virtually all, your company, the U.S. Property Shop, will do virtually all the legwork for the attorney.
Yes, we are a support, foreclosure defense support, if you will. And again, you don't have to be in foreclosure to use this system. You can do it just being upside down.
And how much is the cost?
On the research, review, and recommendation, that's a $795 fee. And again, that is going to tell you all of your RESPA and TILA violations and where clouds are on the title, if there are, where transfer of servicing hasn't taken place. And if they need to go with the securitization and Bloomberg report, that's going to be an additional $1,395. And again, that comes with an affidavit from the attorney that you can use and file in court.
And how would someone know if they need that $13.95 cost, or for the Bloomberg's report, securitization report, to go into court? Can they just go in with the RESPA and TILA forms?
They can. However, RESPA and TILA violations are minimal fines to the banks, and the reason they're minimal is because the banks set those fines. But not having the ammunition, when you walk into court in quiet title, you want to be able to prove to the court beyond the shadow of a doubt that that loan has been paid off. So again, you can file on RESPA and TILA violations, which is a minimal slap on the hand to the bank, if you will. But with the securitization and financial audit, that's what gives the bank, the court, the proof that the bank has been paid.
Okay, so tell me about the umbrella here. Why would somebody want to come into just your group and not want to do this on their own?
They can certainly do it on their own. It's like anything else. You can cut your own hair, right?
Yes.
How's that going to look when you get done?
Not so good.
So that's why we say you want to come into our umbrella. We have the experts. We have the title companies that can pull title work. We have the system in place to be able to submit transactions, and everything will be kicked out to you in a formal filing, so that you don't have to do all the typing and the paperwork and the research. And you come to our workshop. It's a 2-day workshop. Out of that workshop, you're going to know exactly why, how, when, and what has happened in our banking industry, and how you can utilize that to, again, I'm going to put it this way. The government paid the insurance companies that paid off our mortgages. That money came from us, and yet they're still stealing our houses from us.
It doesn't sound right.
It isn't right, but they're doing it anyways.
So when is the next workshop?
We're having our workshop in Las Vegas on the 26th, 7th, and 8th. It's a 2-day workshop that we're going to do for 3 days in Vegas. Reason being is we have a lot of people coming in from LA, so we're going to start our Friday workshop at noon till 5. We're going to have an all-day 8:30 to 5 on Saturday, and then Sunday is going to be from 8:30 till noon. And that'll give people a little time to play around in Vegas before they go back home.
And what's your upcoming schedule after that?
Then we're going to be in San Francisco, San Diego, and Oakland in September, and I don't have all the exact dates on that. And then Chicago in October. November we're going to be in Cape Coral, Florida, Fort Myers area. We're scheduling Wisconsin, DC, and Michigan. And so again, we'll get you those dates as they're finalized.
How about Texas? Is that in the plan?
Texas, they do things different out in Texas, but I have a couple people out there that I'm working with right now who are telling me that they need this out there, so I don't have anything in stone yet, but that'll be coming soon.
Okay, and what's the cost of the workshop?
Cost of the workshop is $1,500. For that, you're going to get materials, case law, you're going to get filings, all the information that you need to be able to do this on your own or pro se. However, it would be much better for you to use our system because it's already, I'm having a pre-senior moment here.
That's all right.
It's refined. Our system is refined to be able to do the intake and put everything in order, ready to go for you.